Welcome to our weekly livestock market update. I'm Newsacre reporter Meghan Grebner. With us is University of Missouri's Scott Brown. Good afternoon or good day.
Good morning, Megan. How are you?
I'm doing well. As you can tell, Scott and I are both on the road today, so we're going to get right to it. Let's start first and talk about how the markets ended up this week and anything maybe that we need to take note of.
Yes, so when I think we look at markets this week, we've certainly seen some down week, especially when you look at futures. Cattle off pretty hard for the first 4 days of this week. We've also seen hog prices lower, so we've started this trend of what's been lower prices, and it certainly gets our attention. For the first time probably since March, we've seen the pork cutout value down slightly for the week relative to the previous week. So seeing some signs that meat prices are coming under a little more pressure than we've seen of late.
Scott, when we look at the decline in values and a little bit more pressure, what does it mean for our livestock producers, and what do we need to take note of on the production side as we move forward?
Yeah, so I think we need to continue to figure out what works from a risk management standpoint. Cattle are certainly making us think twice about whether some retained ownership in the feed yard might be of interest. I think packers and feed yards in particular have started to get the upper hand when you see increased supplies of feeder cattle, probably pushing feeder cattle prices down pretty hard.
Let's talk a little bit numbers as well. Let's look at the livestock slaughter side of things. What are some of the things that we can take away from the first 6 months of this year?
Yeah, so we're starting to get a little bit of indication of what we're doing from the beef cow herd side of things, and I sometimes like to remind us that although beef cow slaughter is up 8.4% for the first 6 months of this year out of the slaughter report that we got yesterday, that's still the second lowest beef cow slaughter that we've had in the last 30 years. So, still some signs that we might be growing, although I think that rate of growth is down. When you look at the heifer slaughter side, it's when you look at June slaughter for this year relative to previous years, it's the lowest since June of 1974, just to give us a little perspective. So kind of continue to worry about growth in beef cow numbers. I will say when you look at slaughter weights, maybe a little bit of good news in that steer weights were down 5 pounds in June relative to a year ago, and we continue to see hog weights also down about a pound relative to a year ago. So both of those things have helped us. On the hog side in particular, weights have been down now for 16 consecutive months, I think helping us with what are slightly higher hog runs as well.
Scott, when we talk about those lower weights, whether it's the steer side or the pork side of things, does that make a significant difference, or how does that make a difference on our production costs as well as farm income as well for livestock?
Yeah, so I always go the easiest thing is we have less meat supplies in general when we have those weights down. But I think we're seeing this situation where when the economics aren't quite as good, we might be running those cattle to slaughter a little sooner, a little younger, a little lighter weight. Perhaps we're finding cow-calf producers willing to let those calves go sooner to the feed yards than otherwise would be the case. So we may not be backgrounding them quite as long. And certainly as corn prices have gotten cheaper, especially this week, it seems like it's a good opportunity to put weight on in the feed yard instead of putting weight on out with the stocker situation.
We're taping a little bit earlier than we typically do. Cattle on feed report comes out this afternoon. Let's talk a little bit pre-report estimates and maybe some of the things that we can glean from the report later today.
Yeah, absolutely. I think the big piece of that's going to be what happens to cattle placements. Pre-report would suggest we're going to be up about a little over 6%. However, the range of pre-report estimates say everybody's talking about more placements. Anywhere from 103.8 to 109.9 is the range of pre-report estimates that we're seeing. Cattle on feed, I think continue to see kind of the same thing. Increased availability of feeder cattle supplies that are outside feed yards, I think are part of what's going on. I will say, don't forget, this is the cattle on feed report where we are going to get some numbers on the percentage of steers and heifers on feed. So might give us another indication of what we're doing in terms of holding heifers back in the herd. We talked about this a while back that we seem to be lowering the number of heifers going in the feed yard. So I really want to see what that report's like. And I guess if I add on top of it, normally we've in the past gotten the cattle report that gives us a head count of beef cows come July 1, and we're not going to get a report this year, and so we really don't get a good beef cow inventory count until we get back to next January of 2017.
Are you anticipating any more expansion things?
So Megan, it won't surprise me to see more beef cows come January 1 of 2017 than where we were in 2016. So I think that growth is going to be there. In fact, I'm a little worried that we've seen a lot of bred heifers that have calved this year that are going to add to the counts come January 1 of 17.
You mentioned corn, soybean prices this week. Is that still continuing to play up to a positive note for our livestock producers right now?
Absolutely. I think when you look across the board, it is the positive news that we have. Although our crop colleagues may not think that's such great news, but lower feed costs are the only thing that's actually helping the bottom line of a lot of these livestock industries actually see something a little better than break even. I will say even on the hog side, despite some lower hog prices this week, lower feed costs have offset those lower hog prices and given us something that, although not great, certainly not a lot of red ink. And so of all the things we can look at, I think that's the one that, as I travel by train today across Illinois, will say there's a lot of good corn out there. We're getting a lot closer to that corn crop being in the bin, and I think that could keep feed costs down for livestock producers here for a period of time.
Scott, and I would tell you as I travel across Illinois today in a car, I'm also seeing a lot of really, really good corn and a lot of pretty decent looking soybeans at this point.
Yes, I think these crops look a lot closer to being made at this point than we were a few weeks ago. It's amazing. We were talking about dry weather in some parts of corn country not that long ago, and I don't think we have many places where we talk about dry weather now.
Anything else to take note of this week, or anything to look out for next week?
Yes, I again, fairly quiet once we get cattle on feed out. We're going to get cold storage report out as well, and we can talk about those when we get to next week. But by and large, we're going to continue to stay focused on what happens to both live prices and feed costs. And futures markets have certainly been tough on cattle markets this week. And we'll just have to wait and see as we move ahead whether we can get any kind of recovery or not.
Scott, thanks for chatting with us this week. Safe travels home, and we will talk to you next Friday.
Very good, Megan. Thanks a lot.
Thanks, Scott. Make sure to subscribe to our weekly livestock market update. Go to brownfieldagnews.com for a link to do that.